tuning into Talking Point. I'm your host, Niraj Shah. Center stage, top of mind for everybody is what's happening around the world on the energy crisis in China and the resultant supply chain effects, if any, in multiple commodities, specifically chemicals. But as the Bloomberg stories suggest, we could soon start feeling the pinch in items such as toys, textiles, and more. Now, we thought it best during the course of this week and the next to talk to as many companies which are multinational corporations to try and figure out what is happening with their companies, of course, but what is their experience with operations around the world because of supply chain issues and because of the power outages in China and possibly raw material issues. GMM Pfaudler needs no introduction. They have presence across multiple countries on the production side and clients across the world. World leader in glass-lined equipment, and Tarak Patel Johnson to talk about all that I just mentioned. Tarak, I hope all is safe. Thanks so much for joining in.
Thank you, Niraj, for having me. Nice to see you again as well.
Yeah, likewise. Tarak, can we start off with the big picture, really? For the last 3 months, we've heard multiple stories from multiple large Indian companies as well about how the supply chain issues are causing a nightmare and higher expenditure as well. Freight rates, container rates, what have you. Add to that, the last 2 weeks, the China power outages and the resultant production cuts or stoppages, and therefore maybe shortages of raw materials have taken center stage. How have you seen this whole thing over the last 3 months and particularly the last 2 weeks for your operations and for your clients' operations?
So there hasn't been, Niraj, a significant impact for us globally. Some of the benefits or the outcomes of the China Plus One strategy has been really working well for us. What we've seen on the ground is investment has come back to countries like India, the US, Europe. I think people are realizing that they were over-dependent on China and on India, so they're creating redundancies locally as well. The only other aspect that probably has affected us a little bit is that China's demand for iron and iron ore had increased over the last maybe 2 or 3 quarters, which is now slowing down. So metal prices, we hope, will reduce over the next few months. But specifically in terms of production, we've not seen any slowdown in production in China or any of our global factories as well. Materials have been coming in, the raw materials, stainless steel, carbon steel, all that has been coming in as on schedule. So we haven't seen any slowdown in terms of production. And the good thing for us is that over the last maybe a few quarters, we've seen significant order improvements. So order intake across all our geographies, across the US, across Europe, China, India, we are now booked out for nearly 12 months, 16 months. So that's definitely a good sign for us.
Tarak, so order inflow, I'm sure, would not be a challenge for a company with your brand. But is execution becoming an issue? If not for you, then maybe your clients can't either take the orders because their own execution might have gotten delayed in any fashion, presuming that you have some clients in that region as well. And notwithstanding what's happening in China, just the last 2-3 months, has expenditure at large gone up because of freight delays, container rates moving up, etc.? Is that causing any kind of a headache for you or for your clients, if you will?
So I guess freight rates have increased, like you rightly said. Luckily for us, most of our contracts are ex-work, so freight is always added on and paid by the customers. But we are seeing a slight reduction in freight rates now. But I haven't seen a specific case. Maybe a few customers who kind of been delayed in terms of their civil work or building the buildings and stuff like that. But no, I mean, I wouldn't say it's really a trend that people are delaying, accepting the equipment. That's something that we're not seeing. People are ready. It's actually the opposite. So it's not that we can deliver fast enough, right? So people still want to put up quick projects, 6 months, 8 months. Unfortunately for us, our backlog is significantly large right now. We would like it to reduce significantly. We are in the process of adding capacity in Europe, in Brazil, in India, so that hopefully over the next few quarters, we can kind of bring down the delivery times and kind of, be able to cater to our clients in a much quicker and faster manner.
Well, that's a good problem to have, I must say. So, Tarak, you are in fact saying that for you or for your clients per se, there are no major delays either due to the China factor, and raw material shortages coming there. You at least haven't seen anything thus far.
So I would say that we've been very lucky, Niraj. I know that you've been talking to me for a few years now, and obviously we've been through ups and downs. And this acquisition itself was a significantly larger acquisition for a small Indian company. A lot of people had questions about how will an Indian company integrate, how will they get the culture organized, how will they go into lower growth markets like Europe and the US. But what's been really heartening for us is that, as you rightly said, order intake has been so strong. All our factories across the world are now sold out for the next 12 to 14, 16 months. It's a good problem to have, and the momentum is picking up, and you will see over the next few quarters the numbers, the performance will speak for itself. There are specific cases of us working together with Pfaudler. There was a large project in the US. The government was setting up the chemical manufacturing, the facility. It was a fast track project, very large in size. The Pfaudler US business could not kind of cater to it quick enough because of the backlog. GMM Pfaudler stepped in, we worked together, we gave the customer the right delivery numbers and the schedule, and then the entire order came to us. So there are definitely quick wins that we've had. We're definitely seeing that as a group, we are able to cater to a much bigger chunk of the market. And I think over the next few quarters, you will see that also in our performance.
Okay. Now, to the broad brush business-related issues, Tarak, or questions rather, not issues. The two spaces that you are probably are your largest clients, presumably chemicals and pharma, both seem to be in a very sweet spot. Almost everybody is waking up to the fact that India is arguably the next chemical hub in a few years, if not already. How is that translating into the order intake? I know you said it's very, very robust currently. Just trying to understand if chemicals is playing a very large part in that. And can that continue for the next few quarters or years? Because I hear company after company in the specialty chemical space talking about capex plans.
Yeah, not only that, you must have seen the number of chemical companies that have recently raised money from the capital markets, IPOs, secondary, primary kind of fundraisers. So chemical is definitely a buzzword right now. It's a very important part of our business. We are seeing a lot of investments. I think the China Plus One strategy is really picking up steam here in India. At the same time, we're seeing diversification as well, right? So you see a PI industry is now getting into pharma. You see many of the other chemical companies like an SRF as well getting into intermediates. So that entire piece is also playing out quite well. But again, I said the demand continues to remain strong. From whatever I have spoken to, the people that I've met, I think the next 3 to 5 years for India in the chemical and pharmaceutical industries will remain quite strong. I think the problem for us to kind of ramp up quick enough to be able to cater to this demand, right? I think that's something that we are trying to do. We are in the process of adding new capacity. We've added a furnace in Hyderabad, which will come online in December. We've ordered a couple of more furnaces here in Gujarat as well. So the idea, and every time we kind of invest and we kind of say that it's going to kind of stagnate or slow down, it surprises us, right? So the market is growing, and I expect that market to continue to grow.
Actually, we've seen the reverse as well, right? The pharma companies trying to get into businesses which are largely dominated by only chemicals. What does this translate in terms of numbers, Tarak? I mean, 1,700 crores, I presume, was at the end of Q2 console book. New order inflows are maybe out 750, 800 crores. I know you will be very close to your results declaration, but have those numbers moved up quite substantially?
Yeah, so I didn't get a chance to speak to you at the end of Q1, but our numbers and our guidances have already been met. There was obviously an accounting issue that kind of showed the numbers in a negative way because of the PPA impact that we had. I spoke to you, I think, a few months ago on that. But on a numbers front, on guidance, I think we've done far better than what we had guided towards. The order intake is 30% higher than last year. This is at a global basis. So I expect this year, and you will see at the end of Q2, the performance will speak for itself. I think a lot of people are waiting and watching because obviously it's a very large acquisition. There are a lot of moving parts to this, but I think things are falling into place. I think what's really been exciting for us is that I actually got a chance to visit some of the facilities last month. The momentum, the motivation of the people there, I think that's really, really, really exciting. We're also trying to kind of now professionalize the business, it's a very large business now. It should kind of become less promoter driven and more professional. So that's something we're trying to work towards. We have a first global strategy meet now planned at the end of this year, getting all the top people together in a room and kind of, having a 3 to 5 year outlook. So a lot of these things which probably were not done in the past, we're able to get that done. And luckily for us, business is good, right? We're not scrambling for business, and that helps us to kind of focus on other areas. So I think over the next few quarters, you will see the company will improve, the company will grow. There are a lot of opportunities for us, a lot of synergies to extract. So it's exciting times, Niraj, for us. And I hope that over the next few quarters, you'll invite me again to talk to you, and I can really talk about the improvements that we've made.
Oh, for sure. But before we get to the next quarters, Tarak, a couple of questions this time around that I would love to. So we didn't talk at the end of quarter one, I know, but when I went through the con call transcript, please correct me if I'm wrong, but you had mentioned that you were working on a very large project in the US wherein this Indian-made equipment will satisfy the client out there. Was this the same one that you just told me about, or is this something else? And has the execution happened now?
Yeah, so the same one that we were speaking about, very large order, very fast-track project set up by the US government. And that has now been received. The order has been received. It's obviously been routed through Pfaudler US. And it's going to get executed in this year. So it's a bunch of glass line equipment and stainless steel equipment, something that we are obviously well known for in this specific product. So, we were obviously the first choice of refusal was given to Pfaudler. And when we could use India to deliver within the time frame that the customer wanted, it was a win-win for everybody, yes. And as you rightly said, it will be executed by the end of March 31st. So you will see that kind of flow through in terms of profitability in this year's numbers as well.
You are a leader any which ways, Tarak, but do instances like this reinforce credentials and bring in more business? Have you seen that happen? Because as you said, this is a bit of an unknown wherein the order came into a US company, but the Indian entity stepped in to help facilitate that business. Does that help in any fashion?
Yeah, so what I would say, Niraj, is 2 years ago, the group would not have got this order. There was no way that we would have worked together to win this business. But today, as the alignment is there between the group, everything flows into GMM Pfaudler. It's only natural for people to kind of do what is in the best interest of the group. Let's keep this aside because this is a large one-off project. But since the acquisition, since the integration has begun, we have actually set up a program that we call EPIC, where we are going to sell Indian-made equipment into low-cost markets. Markets like Russia, markets like Eastern Europe, Southeast Asia, Spain, where Pfaudler did not have a very strong presence, right? In that itself, that EPIC program, we've already in 3 months achieved the target for the entire year, right? So I think success will build success, momentum will pick up. For a sales guy, it's a great opportunity to kind of say, okay, I have my, premium customer base that I will cater to from Germany or from the UK or from Italy. But then I have this customer base in Eastern Europe that I could never even, talk to earlier. But now with India, I can really go after that market share as well. So there are definitely opportunities. And this is something that we've always thought about, that India, there is an arbitrage on labor. There is a big arbitrage in terms of the man hours and the labor cost. If we can kind of leverage that, it's a win-win situation for the group.
What would stop you from being able to leverage that, Tarak?
I personally believe that the Indian demand itself is quite high. So my only problem currently is that I'm booked solid. So I can only allocate so much capacity for the international business. At the same time, I don't want to lose market share here. So the only thing that really stops me today is the capacity. But like I mentioned to you, we are in the process of adding capacity. We have, made some acquisitions here. We freed up capacity. So over the next few months, I think adding capacity quickly enough, getting our quality levels up to speed so that we can cater to these markets, I think that's going to be key for us.
I'm just wondering, and I don't know what's a right or a wrong there because business decisions are not made in a rash, but would you look to advance capex or acquisition in any fashion, looking at the demand?
I think so. I think that's something that we've been very conscious about. I think that we need to kind of bite the bullet. We've been a bit conservative in the past, thinking that the market will slow down. But it's not only the Indian market that we're catering to now, we're catering to the global market, and India is going to become the hub for manufacturing. So I think we will have to step up our capacity expansion and kind of ramp up quickly enough to cater to both the Indian market and the global market.
and inorganic opportunities available at a good rate, Tarak, currently? Because I think you've done one in the past, right? You bought out your nearest competitor, if I'm not wrong, in the Indian landscape. But is there more such capacity available at a good price, or would you need to resort to organic moves only?
So I think organic is obviously going to be a nice growth area for us here in India, but internationally we do and will always go after inorganic opportunities. Maybe not in the same business line as glass line, but there's a lot of technologies that can be add-on complementary to the glass line product base, right? So the enhancing our product portfolio has always been an important kind of strategic idea for us. But at the same time, some of the new products that Pfaudler had in their portfolio, we're now launching in India, right? So it's a reverse kind of product improvement, if I may say so, here in India. We have a new product called the Interseal that we launch next month. We have a good amount of excitement in that product line specifically because it goes along with most of our reactors. But at the same time, we are not saying no to any inorganic opportunities. There are a lot of good companies, good technologies out there. And if the right opportunity comes up, we'll be more than happy to take it.
And the international operations are have sufficient spare capacity to be able to supply if these new products in India become a hit. There are no constraints there, because I heard you say that all plants are full on the order book already.
Yeah, so there are constraints in terms of delivery, but what we aim to do, because some of these plants are new plants, they were just started 6 months, 8 months ago. Some of them were moved from old plants to new plants. We expect the capacity utilization to improve over the next few quarters. We are working on operational excellence. We're trying to get more product out the door. And I think with the help of an operational excellence team that we put together now, you will see the output increase over time. So we need to maximize our utilization across all our facilities.
Okay, Tarak, I'll save the numbers for the end of the quarter conversation because you would be constrained to speak numbers currently, I understand. But can you just give me, before we wrap up this conversation, can you give me one sense of how has been the experience in the quarter for the input cost pressures? Because I know you mentioned that the costs have started easing, but for the better part of the quarter, were they still very high? And could that cause pressure on the operational front?
No, I don't believe so. I think we are, tracking towards a very similar kind of margin profile that we've already showed, which is, quite good and way ahead of the guided numbers that we were talking about. India continues to remain very robust in terms of profitability. And that's because we've had a nice mix of export business. We've had a nice mix of spare parts. We've had a nice mix of equipment here in India as well. So we've been able to kind of, even though the prices have increased, the customers are quite aware that steel prices have gone up because they buy a lot of other equipment. They buy steel for their construction. They buy stainless steel. They buy carbon steel. So they know quite well that steel prices have increased. So I don't see any pressure on the margin front. I think because of the incremental volume that has been shipped out and will continue to ship out, I think there will be a better flow through and absorption of costs. So I think over time you will see that at least here in India and globally, you will see improvement in profitability as well.
Fair call. Tarak, lovely talking to you. Good to understand because we didn't talk at the end of quarter about GMM Pfaudler, and great to get perspective on the global front as well. Thanks so much for taking the time out.
Yeah, so let's catch up after Q2. I think there'll be more to talk about. So let's plan to do that as well. Thank you so much, Niraj, for having me.
Well, pleasure was ours. Looking forward to that interaction as well. Thanks, Tarak, and viewers. Thanks for tuning in to this edition of The Talking Point.
Thank you.